So we are going to start. Welcome to this session dedicated to Bitcoin and the blockchain. It's going to take place in English, so please be lenient for my English. We have three speakers with us. First one is Nicolas Cary. He's the CEO and co-founder of Blockchain, which is the world's most used wallet service, 3.5 million users. Is that true? And he's going to talk about the basic principles of Bitcoin and the blockchain. Larchevêque is the CEO of Ledger. Ledger is a security solution for Bitcoin, and is also the founder of La Maison du Bitcoin, or House of Bitcoin. And he will talk about the potential applications of the blockchain. And finally, Sébastien Canard, who is an expert and researcher at Orange Labs, and who will address the current limitations and the challenges, the future challenges of the blockchain. As a short introduction, I'd like to share with you and with our speakers my personal mixed feelings about Bitcoin, because when I first heard about this idea, I was quite fascinated. This idea of a distributed network to validate transactions and to produce a currency. It seemed to me radically new. We say disruptive, and I think it's really the good word. And on the other hand, when you look at the way people use Bitcoin, there is, for example, a very interesting study of an Israeli cryptographer, Adi Shamir. He studied the blockchain extensively, and his conclusion was that a majority of Bitcoins just don't move from their wallets. So people use Bitcoin to accumulate, to speculate, and eventually to buy things. And this is not so disruptive. So it's quite clear at that time that this innovation hasn't released its true potential yet. And I hope our speakers will open new lines of thought about that. So we're going to start with you, Nicolas.
Merci. Alors, je pensais que j'allais pratiquer mon français aujourd'hui, mais vous allez pratiquer un peu d'anglais. Okay, we'll see how this works. So, my name is Nicolas Cary. I was born to a French mother, so I can relate to everyone's experience here. My father lives in South America. My sister has been in Africa the past 2 years, and I have traveled about 350,000 miles in the past 12 months, lecturing, speaking about Bitcoin, meeting with legal and governmental affair bodies, and basically doing advocacy work as much as possible. And on the side, I run Blockchain, which is the world's most widely used Bitcoin company. We have 3 category leading services. So we build wallets to let people secure, send and receive and transact Bitcoin. We have about 3.5 million users. We have a search engine that lets people go study transactions that are happening on the Bitcoin network. And at the core of our business is a developer platform that lets software engineers, wherever they are, build really cool applications for the Bitcoin blockchain. So I'm going to take you through today. There are probably some experts in Bitcoin up here, but also in the audience. But before you can really kind of understand why this is such an interesting innovation, it's super important to understand the fundamentals about it. So let's just take a quick moment to build some context. Imagine a world with completely frictionless payments. A world where you can send value from a fly fishing lodge in Patagonia instantly all the way across the world to Singapore, basically for free. Imagine a world where you had a global payments network, a payments platform with 0 barriers to entry, where anyone, regardless of where they were born or what color their skin is or what their gender is, could choose to participate. It's voluntary. So that's what Bitcoin is, just at a very, very high level. It's a global payments network, and it kind of possesses 3 things. It has a currency, it has the ability to settle transactions with a high degree of certainty, and you can do this anywhere in the world. It's a network for the age of the internet. So I'm going to discuss a couple things which are the basics of Bitcoin. I want to go through the history, which is kind of interesting, and it's still sort of evolving. Finally, the economics of Bitcoin, which are very interesting and very debatable, and then some charts and trends. We can talk about where we've come from in just a few short years. So, at the most basic level, Bitcoin is a technology. It's also a computer protocol. We use protocols in the devices that we have in our pockets every single day. Most people in here send emails to their friends and loved ones, and that relies on something called TCP/IP, which lets your phone send messages to a network of servers all over the world and instantly deliver email wherever you are to anyone you want to. So just like there's a global messaging service, essentially, Bitcoin is a financial protocol for the internet, and we've been in desperate need of this. It's also a huge network. It's the world's largest distributed computing project on Earth. And so basically, if you were to take the world's 500 most powerful supercomputers, it would not be more powerful than Bitcoin. So what does it kind of look like? This is an abstraction. Essentially, people can choose to download a piece of software and run it on their computer. Now, you kind of need specialized equipment to do this now, but you can still experiment with it, and that makes you a node on the network. And for participating in the network, if you basically lend your computing power to update the transactions that are happening, you're rewarded every 10 minutes or so with tiny fees and small amounts of Bitcoin. So it's participatory. So you have the three basics of a transaction network: a currency, a trusted ledger to settle the transaction chain of who owns what, and fundamentally, settlement with a high degree of certainty. And these are requirements in order to have a global payment network. So oftentimes Bitcoin is confused with many things. I would say 9 out of 10 people a year ago had never heard about Bitcoin. And now 9 out of 10 people have probably heard the wrong things, but that's okay because it means we're making some progress, I think. But Bitcoin is not a company. It is not illegal. It's not centrally controlled. It's not proprietary. It's entirely open source. And it's not bound by jurisdictions the way we think of other types of applications. It's entirely a global phenomenon. So the photography you'll see in this presentation, by the way, was taken over the past year as I traveled around the world. So fundamentally, Bitcoin is a peer-to-peer payment network. We use peer-to-peer technology a lot. We just don't always know it. Skype, for example, was based on peer-to-peer telephony. And voice over IP completely changed the way we talk on phones, and we don't even realize it. Bitcoin will do the same thing for money. So when a transaction is made, it is instantly broadcasted to something called the Bitcoin blockchain. And I'll have a demonstration of this in a minute. But basically, transactions are sent between wallets, between people to exchanges, and soon between machines. So what does it look like? Well, you have a Bitcoin wallet, which you can download and install on your phone. In 30 seconds, you basically put an application that is free, that's open source, onto your smartphone that completely replaces all of your banking needs. And you can then give someone a Bitcoin address. Just like if I wanted to send Eric an email, he would need to give me an email address. If I wanted to send Eric some Bitcoin, he would show me a Bitcoin address. It's like a public routing number to his wallet. So when that transaction is made, it broadcasts the transaction to a giant network all over the world, and you can visit the blockchain.info, and you can see the transactions streaming in real time. To give you a sense for the scope of this, we're doing about $300 million worth of transactions a week, and 2 or 3 years ago when that study came out, there were maybe 2,000 or 3,000 transactions a day on the Bitcoin blockchain. Now there are over 100,000 every single day. So you have to look at the overall speed at which things are happening and the trajectory, but it shouldn't be a big surprise. Sending Bitcoin from one place to another is the most efficient way in the world to send value right now. If I wanted to send these chairs to New York City, it would be faster to FedEx them than to wire money there right now. But using Bitcoin, I can do it instantly. So let's talk a little bit about the history. It's only a 5 or 6 year old experiment. It was introduced conceptually as a white paper by a group of developers, or a developer, we're not really sure, that launched as a network in 2009. In 2010, some basic marketplaces formed and people were discussing Bitcoin, but the people that were doing this were cryptographers and computer scientists, really, really nerdy people. In 2011, there was some angel investment in the space, and at that point, more and more people started to pay a bit of attention to it. In 2012, merchants all over the world started to accept Bitcoin. And this is sort of curious. Usually consumer adoption sort of beats out merchant adoption. In Bitcoin, it's happening at about the same rate, and there's a really good reason. When you go buy a cup of coffee or you pay for something at a small store, every time you make a transaction with your card, there's a base fee, and then the merchant eats a 2 to 3% cost on every transaction, just to accept a form of payment and just to give you goods that you want. And actually, these have costs for consumers. If you don't think that we're at some point eating those costs, you're absolutely wrong. So merchants started accepting Bitcoin because when they take a Bitcoin payment, they get 100% of the transaction. It's just like handing somebody euros or dollars or yen, except it happens digitally. Now, what you do with those is up to you. You can go sell them, or you can keep them and spend them again, creating hopefully a virtuous economy. So in 2013, there was a huge surge in startups in the industry. Last year, $650 million of venture capital poured into Bitcoin companies. That is an absurd amount of money. It is more money that went into the early internet to go into these projects. And they're going into Bitcoin and blockchain type projects because there's an incredible opportunity in this industry. I'll talk a little bit about that. The economics are really kind of interesting. We spend our entire lives in pursuit of money, or some of the students here will probably start to do that soon, paying off student debts like I had to. And we don't always think a whole lot about where money comes from and what creates value. They print paper bills and they put people's pictures on them, and we're believed that this is supposed to be tender, that we can be able to redeem for goods and services. And every single year, we hope that that'll be the case next year. What happens, though, is that more and more money gets printed every single year through things like quantitative easing. Central banks just print incredible amounts of money. Well, Bitcoin has a very, very different approach. It's a fixed inflation schedule. We know exactly how much money is going to come into circulation, so it's predictable. This is very different. So basically, coins are going to be released on that curve. Every 4 years, there are fewer of them. Some people ask, why did so many come into circulation at the beginning? Well, the idea was to incentivize the transaction velocity. If more people have them, then they'll share them. The network is maintained, again, by volunteers who lend their computing power and energy to secure the transactions. Basically, what that means is they keep track of a database, and for doing that, they're rewarded with small fees. So the whole thing is regulated by mathematics. There are no politicians involved. All the rules were written when the network was launched, and that's the way it is. There is a software update process, so you can make updates to the Bitcoin protocol, and that requires consensus from all the members of the network. It's pretty cool. So let's think for a minute. We as human beings have invented all kinds of things in our lives. We invented wheels so that we could drive around. We invented shovels so we could dig holes, and then tractors so that we could build roads, right? We do things to create more efficiencies. Why can't we create a better form of money? Well, let's think about it. For the age of the internet, what kind of properties would you want a money to have? You might want your money to be easily able to divide and recombine. You would want your money to be impossible to counterfeit. You want your money to be durable. Paper money is sort of ridiculous. If you wash it, it gets destroyed, it can burn in a fire. How about money that you could instantly redeem on any smartphone with a secret passphrase? So even if you chuck your phone into the Seine or have an accident with it or drop it, you don't lose your money. All those things are possible. In the age of the internet, you'd really want to be able to send that money anywhere in the world instantly, basically for free, allowing you to create relationships which essentially almost all human interactions at some point fundamentally come down to transacting. If you can bring everyone into the sphere of economic influence of the internet, then you're onto something very powerful. Well, Bitcoin does that too. And for the first time, Bitcoin is the only transaction network with something that has zero counterparty risk. So right now, if I have a deal with Eric and he provides some consulting services to me and I ask for a payment, let's say I take a credit card payment, well, he could issue a chargeback. So he could do the work and then get his money back. That's kind of a problem. And because of all these types of intermediaries, whether it's credit card companies, merchant processors, banks, there's tons of friction in every transaction that happens. And that doesn't need to be the case. Peer-to-peer transactions are much more frictionless and therefore have lower costs and are basically better for everyone on both sides. So I submit that if you were to design a currency, Bitcoin would be an interesting experiment for the age of the internet. Is it perfect? Probably not. But there are going to be many, many other experiments in this industry as well. So where are we today? This is some high-level information. The overall network is worth about $3.35 billion. So this is actually not that big. A skyscraper in London is more valuable than the entire Bitcoin network right now. So just to put things in context, we have a lot of work to do. But that's the transaction volume. You'll hear people talk about the price of Bitcoin and what that is today because it's a currency and it has value. That's not that interesting to me. What's interesting to me is whether or not people are moving it around. So that study that was conducted a few years ago happened when you can see basically there's very small transaction volume. Week over week, we're hitting records. So that means more and more people are starting to adopt and use Bitcoin to send value. So I find the most interesting metric is just basically transaction volume. So what? Why are people all over the world talking about this? Why is Goldman Sachs and BBVA and NASDAQ and most of the venture capital firms in the world, Richard Branson and others, put money into Bitcoin projects? Microsoft, Dell, Overstock, OkCupid, WordPress, Wikipedia, all accept Bitcoin as forms of donation and for payment. They're doing it because it's the world's first scarce digital commodity. They can accept a payment with zero counterparty risk. They get 100% of the payment. There's no fraud. And basically, it allows them to send value anywhere in the world instantly, basically for free. So at its core, here's kind of where we are. When the protocol was launched, the people that were building that were software programmers and cryptographers and developers, and they're still doing that. They're volunteers to participate and basically maintain the core code base. There was a wave of builders. These were sort of the early startups in the industry, building things like exchanges and wallets, consumer services, merchant services, mining services, and more. These are sort of the new verticals of future finance. And then the next wave of innovation, which we'll hear about soon. Oops, sorry. The next wave of innovation we'll hear about soon will be all kinds of really fascinating applications. If you take out an intermediary between a transaction, money is just the first experiment. What if I could get rid of all kinds of other intermediaries? How many people get really sick of waiting in line to get pieces of paper stamped and notary services? It's crazy. These are relics of ancient times, and we don't need to use them anymore. This solves all kinds of wild ideas like property rights, global governance, voting services, with certainty that what you decided was actually shown. We'll look at some of those examples soon. So this is the investment landscape. Basically, there's been a huge amount of money poured into this. If you think that Bitcoin is sketchy, maybe that's something that you should reevaluate. The companies that are accepting Bitcoin have hundreds of billions of dollars of market capitalization. They don't do things when there's reputational risk. They make investments and votes of confidence when there's really interesting things happening. So there's been a massive amount of movement in this industry. It's still going very quickly, and you will see more and more names added to this list over the next 12 months and coming years. So with Bitcoin, it doesn't matter where you were from. It doesn't matter whether you were born in the first world or the third world, whether you're a mother sending college money to your daughter or a father sending wages back home to your family across the border. This is the most important innovation since the internet. And the reason is because people have financial independence to transact with whoever they want without somebody telling them what they can and can't do. And it's a really big deal. I want to talk just quickly before I hand this over, and we'll be excited to have conversations about any questions you have. But there's a story I want to share real quick, and basically when I was in Morocco last year with my sister, we went out into the desert, and we had a Berber guide that was taking us into the dunes, and we hadn't seen an electrical system or any sort of sign of civilization for a while, and we're watching the sunset. It was absolutely beautiful, and in that moment, the whole thing was ruined when our guide, who sells rocks and polished geodes for a living, pulls out his iPhone 5 and answers his phone in the middle of the desert. And that guy has access now to a financial service and a financial network that is more efficient than hedge fund managers and more efficient than the ones that Fortune 500 CEOs have access to. So think about that for a minute. If you can put software on someone's phone that replaces banking functions, it's a really big deal. 5 weeks ago, Goldman Sachs, the largest investment bank in the world, released a report that said that 33% of millennials do not expect to have a bank account in 5 years. So if millennials don't expect to have a bank account in 5 years, and there are 2.5 billion people that don't have bank accounts whatsoever, and there are 4 billion people with no credit cards, how are they going to get their financial and banking services in the future? Well, I submit that Bitcoin and blockchain type services and software are going to solve a lot of these problems. So anyway, let's open this up for discussion. Bitcoin is not perfect. I will submit that, and I'm sure we'll hear some really interesting arguments for why, and then I'll counter those to the best of my ability. And thank you.
Thank you very much, Nicolas. I think your presentation already raises lots of questions, but we're going to have the three speakers, and then we will, of course, open the discussion. Eric comes next. Do you know how to access to your slides? Ah, okay. I use Linux. Yeah. That's why I'm so lost with Windows. Okay. There we go.
Hello, I'm Eric Larchevêque and I'm the founder of Ledger. It's a company doing security systems for Bitcoin to protect private keys, and also founder of La Maison de Bitcoin. It's a Bitcoin center which is located like 5 minutes from here, and which is dedicated to give explanation to Bitcoin. We also have a chance to exchange Bitcoin to euros, etc. And we will have some other conference this afternoon at 3 o'clock there. It's 35 Rue du Caire, 35 Rue du Caire. You are welcome to come by. So we have spoken about Bitcoin, and Bitcoin relies on something that we call the blockchain. And I'm going to very quickly, in 10 minutes, to try to explain why Bitcoin and the blockchain as a technology can be used for something more than just currency, which is already huge. And validators in a way, and there is no central authority. You do not have a central node which is going to say, okay, the truth is here, and then we are going to replicate. No, it's a fully distributed shared ledger, shared database. And each time you want to make an update, you are going to broadcast your updates over the internet, because all the nodes, all the validators which have all the database are connected through P2P network. So it is a very efficient way to replicate databases and have distribution of the information everywhere. And if everyone can become a node, a validator, it means that the information is public. And the implication is that it is fully auditable. The blockchain is readable by everyone. If you go on blockchain.info, you can search inside this database. And in fact, this blockchain info is just one node, one validator, and you access it to it through a web page. But everyone can install the Bitcoin software, become a node, and download this information. So it is fully public and auditable. All the transactions are available. You have the full history of everything which has been done on this database. And it is censorship resistant. It means that because there are thousands of nodes which are connected through P2P, you cannot shut down the database. You, as a country, you cannot say, okay, I do not want my citizen to access this database, because maybe you can block a few nodes, but then after you will have thousands of new nodes. It is exactly the same that you cannot put a stop to P2P file sharing like BitTorrents. The only way to shut down the blockchain is to shut down the internet. So it is not possible. And it is irreversible. Each time you are going to make an update in the database, you cannot change it. You cannot go back. Of course, you can reverse the update, but then you will make another update, which means that everything will have a full traceability. And these are one of the most differences between normal database and the blockchain. It is that it is fully decentralized, it is irreversible, you cannot censor it, and everyone can have access to it. So what can we do with that? Of course, we can do a currency, because a currency is a public ledger of who has what. And each time you want to make a transaction, you are going to do an update into this blockchain, and the information will be updated, and then if you send some tokens, some bitcoins to someone, it will just update the database. And from that, you can do much, much more things. And I'm going to take two real-life examples. The first is asset management. The Nasdaq is issuing stock. And right now, if you want to exchange stocks between one bank to another bank or one broker to another broker, you need to update a lot of centralized databases. You are going to say, okay, these stocks I'm going to send from broker A to broker B, so you need to update each databases of each brokers, and it takes time, it takes money, it needs to verify accesses. Today, if you want to transfer stocks from one broker to another bank, it will take 3 days for everything to settle and to be sure. Imagine that you take a fraction of Bitcoin. Each Bitcoin can be divisible until 8 behind 0. So you take the lowest denomination is named a Satoshi. It doesn't have any value because it's very small, but you can attach to this Satoshi a property. You can attach to it a stock, for instance. And the Nasdaq will be a counterparty. It will say, okay, this Satoshi is one stock of company A. And if someone gives me back this Satoshi from the Bitcoin network, I'm going to give him back the stock. So it's a counterparty. And you will have the full property of the Bitcoin network to freely exchange this Satoshi. You can send it to anyone. You can very quickly send it to one bank to another bank. It is extremely efficient. From 3 days, you go to 10 minutes to exchange group of stocks, for instance. And the Nasdaq is implementing that. It is implementing this asset management on the blockchain to find a very new way, an efficient way to accelerate its process. And in the same time, it will open, in a way, its APIs. Right now, if you want to do stuff with the Nasdaq stock, you cannot. It is a very closed system. You do not have any API. The Nasdaq will benefit from all the innovation surrounding the blockchain. So this is an example for like finance. So I'm sure it's not really blowing your mind. So we are going to take another real-life example, which has much more implication. Land registration. In some countries of South America, you cannot rely on the land registry. Why? Because the corruption is rampant. The government cannot ensure to their citizens the right to own lands. Why? Because the land registry is just a database, and officials can have access to this database. They can change it. They can cover the traces. And in some countries, people can lose title of their lands. And after, maybe they can try to go back to the jurisdiction system, but it can take lives. It can take a lot of years, and in the same time, it can really destroy your life. And also, for the country, it's not good, not even from the moral point of view. If you are an investor and you want to invest millions of dollars in a real estate development, you are not going to do it in a country where you cannot secure your land title. And corruption is not something easy to get rid of. So the blockchain gives you a solution right out of the box. Imagine that instead of using a centralized database, which can be corrupted at will by government officials, you use the blockchain. You are going to say that one Satoshi, one traceable Satoshi, a portion of Bitcoins, is attached to a land. And everything will be publicly auditable. Everyone can have access to this database and see that, okay, land owns to whatever. It doesn't have to be an identity that you can see, but the one who has the counterparty, the private key, let's say, can say, okay, this is my land. And of course you can modify it, but it will give you traces. It will give you accountability. And right now, in the country of Honduras, the government is trying to put the land registry on the blockchain and make this at a law. They will pass a law saying that the blockchain, through the filter of their own vision of this blockchain, the land registry, will be the truth of who owns what. And this has very big implications from the society, for the society there, because you can really give peace of mind, let's say, to the citizens about the ownership of the land. So this is a real-life example of what you can do with the blockchain and how it can have impact on the world. And you have dozens of other examples what you can do. It's like global notarization, securities, it's prediction markets, access to real information, and of course currencies, as the Bitcoin is. So I'm sure you have many questions about how really it can work, how can be so secure, how can the decentralized system work. The answer is not easy, but if really it is something which interests you, just go to bitcoin.org and you will have some information about how the blockchain is working, how the consensus is working, how the mining is working. And it can really open your mind on about how such a technology can have a big impact on the world. Thank you.
Thank you very much, Eric. As you've heard, our first two speakers are quite enthusiastic about Bitcoin and the blockchain and all the potential of this technology. Maybe our third speaker will temper a little this enthusiasm, because he's here to address limitations of the blockchain and how maybe to correct them.
Thank you very much. Hello, everybody. So my name is Sébastien Canard. I work for the Orange Telecom company that I think most of you know. The first question I can answer is why Orange is working on Bitcoin and blockchain. We are a big company. We do not really like decentralization, because we are pretty better to centralize things and have most of your data and your information in our servers. So why blockchain and why Bitcoin? Because we are an innovating society, and we want to know how to use new technologies and how they can be used in our problem for our own problem. From my point of view, I work on security, privacy, and more precisely, how cryptography can be used to secure data, to protect the privacy of telecom users, and more precisely, how it can be used more than simply providing authentication, confidentiality, and integrity. And in fact, the blockchain technology is one of such technology that can provide more than what cryptography usually do. And for that, as this is a new technology, a lot of people in Orange come to us and say, we want to use blockchain in such case, we want to use blockchain for that purpose, etc., etc. And I am a researcher, I am an expert in Orange, and my role is to say, yes, this is a good idea, or no, this is not a good idea. So the first thing I have to do is to understand how the blockchain works and how it can solve problems, or how it cannot solve problems. So the concept of blockchain and Bitcoin has already been introduced by Eric and Nicolas. In fact, it comes from the digital cash, the e-cash, that had been introduced in 1982 by David Chaum. The aim of David Chaum was to replace the currency, the paper currency that we are using, and to do it in a digital world. And the main problem of the digital world is that a coin is simply a set of bits that can be duplicated, so that I can spend this coin several times to different other users, which is a problem, since it is what we call a double spending. And most of the time, and that was the work of David Chaum and the work of most of researchers in cryptography later, after 1982, is to centralize the register. That is, we have a bank, a central bank, that can obtain all the coins that have been spent and say that here there's a double spending. But, as it has been already said, this can be a problem in some cases, because this bank should be trusted. That is, if she wants to say that there's not a double spending, then we only have to trust it. And because also of some problem of scalability and exploitation of this centralization. So the main idea of Satoshi Nakamoto was to say, okay, we do not want a centralized part, so we can make this register publicly known, so that everybody can test, okay, here there's a double spending for this person especially. This is really easy to achieve. So the problem of double spending is, with the blockchain technology, very easy to solve. But here comes the problem of integrity. How to be sure that the registry is a correct one, a good one. And that's why miners have been introduced by Nakamoto. And here comes the new mechanism of a decentralized control of the integrity, which can be used for currency, like Bitcoin, and also for other purposes, as Eric has said. And in fact, most of the power comes to these miners, who are now some particular users. Everybody can become a miner and help to control the integrity of the whole blockchain. Not that one. Okay. My slide is not really interesting for now, since everything has already been said by Eric and Nicolas. This is a new ecosystem, clearly, and this is also the message of Adi Shamir. It may break down, or it can be a real breakaway for the future, and really a new business model and a new way for our digital life. And the question is really, from my point of view, really an open question. In fact, when people come and say we want to use the blockchain in such purpose, I can say that most of the time they do not really want the blockchain entirely. They only need some part of the concept of blockchain. Because sometimes, and especially in Orange, we can have a central server that can store something. But we want to have a decentralized integrity of what is centralized in the storage part. So this is not really the blockchain, and some easier solutions can be applied in this case. So we do not know for now how this blockchain technology will evolve and how it will be used for any kind of service, of use case. And it will be hard. It's hard currently to know what will be the blockchain technology in some years. There are new applications. I think that Eric has been quite exhaustive about that. And as Amaelle said, my main topic here is to talk about the main limitation of the blockchain as it is currently. In fact, we can talk about 4 ones. In fact, I've missed one, which I will come back about that later. The first one is related to the first drawbacks currently is related to the energy and the cost of maintaining the blockchain. Some research says that it costs about $800 million each year for the blockchain to be coherent. It takes the time for the system, but also for the work of miners. And in fact, regarding the cost of maintaining the blockchain, this is much more than a centralized system. So regarding Orange company, regarding financial problem, then we are. It seems to be better for us to go for a centralized system than for a decentralized one for that problem. And today's miners funding is based on the issuance of bitcoins. That is, if you become a miner, each time you will certify the validity of a part of the blockchain, then you will obtain some bitcoins in return. In fact, this cost is closely related to the security problem. That is, in fact, if I have more than half of miners who make a pool and centralize their work, then they will be able to control the blockchain. That is, they will be able to create a double spending and validate this double spending, because they will simply delete some part of a transaction that will be a double spending. So that if, so it's about 33% of the blockchain that needs to be controlled. 33% of the miners can control the whole blockchain and so break the integrity of the system. So that if I have enough money to control 1/3 of the miners, then I can control the blockchain, which can be a problem since the blockchain will not be secure anymore, and so we come back to the start of the problem, I can say. I think I can go very quickly on the anonymity part, because a lot of people have said that the Bitcoin technology is anonymous and can permit to pay anonymously, which is not true. This is some kind of pseudonymity. That is, we are traced when we use a Bitcoin. We can link two transactions made by the same person, and but you are not anonymous. Even if we can use some anonymizers such as Tor, there are some attacks that can permit to break the anonymity for this part. But this was not said by Nakamoto in his white paper. His aim was not to provide an anonymous payment system. And the last point is the decentralized context. In fact, as I have said previously, miners can gather together into pools, and this is the case currently, as there are 2 or 3 big pools that are controlling the blockchain. And so, in fact, this is at first this was a decentralized system, but which can become quickly a centralized system, since a pool can have enough power to control the blockchain and to be the one who is controlling that blockchain. So it will be the center of the system, which is not the aim of the Bitcoin at first. Another point I have not put in my slide was the size of the blockchain. In fact, if we consider the Bitcoin context, I don't think this will be a problem. But regarding new use cases, I can take the example of Ethereum with a smart contract, a decentralized system of smart contract. A contract can be a very big, has a very big size, and the problem of this chain is that it will be more and more important, so that maybe at a time it will be too important to store such blockchain. So this will permit to, if we delete some part of the blockchain, this will be a problem because double spending will then be possible. So my conclusion, I don't know if Amaelle is right, I am negative or not. I think that blockchain is a really interesting and innovating technology, and that we should study it, and since it permits to answer a very complex problem, and I think this is really a good technology on which we have to work. But sure, there are some defaults, and I hope I have convinced you about some of them. But I think that a lot of people are working on correcting these defaults. There are a lot of researchers all over the world, a lot of investment to work on the blockchain. So what will be the future on blockchain? I don't know. I will work on trying to improve the blockchain, on trying to solve the problem I have mentioned previously. And we will see in some years if Orange will be a leading part in blockchain or not. So thank you very much for your attention.
Thank you very much, Sébastien. Before we open the discussion with the audience here, I would have one question for each one of you. My first to Nicolas. Of course, Bitcoin is not only a currency, but it's also a currency. And the thing is, it's become increasingly hard to mine Bitcoin. So the first miners have accumulated a lot of Bitcoins, but it's not the case today. And some economists even talk about a Ponzi scheme. I would like to know what you think about it.
Yeah, so to be clear, I'll explain a little bit about how that happened. So when the network launched, the people that were participating early on were mining Bitcoin. And because there were a few of them, they were accumulating more and more of the currency for helping launch the network. And there's been a criticism of Bitcoin in that the early adopters are benefiting more than the ones that come later. And to me, it's sort of a silly criticism. We don't criticize the founders of companies and say that those guys that take incredible and extraordinary risks and work incredibly hard and long hours don't deserve the fruits of their labor. And so for me, to put things in context, like if the entire history of Bitcoin was a clock, we're in like the 3rd or 4th second. It is still so ridiculously early in this entire industry. Bitcoin as a currency is a solution for solving global remittances or payroll services or online financial transactions. There's so many things it can do, and on top of all the incredible opportunities with land registration and property rights registration and digital asset management, there's huge amounts of innovation possible. So I guess I would say that I don't apologize for any of the people that basically worked on this early on, that were called crazy, that were called worse than that, money launderers and financial terrorists and all this nonsense. You know, people said rock and roll was really scary and crazy, and you know, we all like listening to that now. And they'll say the same things about all kinds of new innovations that come out. It's not our job to necessarily be fearful of these things. I think we should study them and research them and give them the diligence that they require. But that being said, I don't think that criticism is valid, but that's my opinion.
My question to Eric now. Financial institutions have been, of course, very cautious with Bitcoin from the very beginning, and that's quite logical because this kind of system can work without banks. So how do they react today? Did they a little bit change their minds, or?
Well, is there any bankers in the audience? Okay. Well, I guess it depends of the countries. I can take the example of France, because our company is in France, and I can just say that because we are dealing with Bitcoins, they are working into this technology. Already, 2 banks have closed their accounts. We are just a company paying our tax, but because we are dealing with Bitcoin, and it's public, of course, then they say, no, sorry, we do not want to work with you, we do not want to be associated with that, so please take your money and go away. So this is currently the state of mind of the bankers. Why? It's not because they feel that they are threatened by Bitcoin, it's just because they do not understand it. And because there is no regulation yet, because it is extremely complex to regulate such technology. Bitcoin is not a money from the legal point of view. It's not illegal, of course, but you do not have any frameworks. And bankers, regulators, they do not want to take any risk with that. So they prefer not to touch this technology. Of course, in other countries, you take the Baltic states, for instance, you have some of the first banks who try to do the cryptocurrency way. In the United States, you have the NASDAQ, the New York Stock Exchange, they're trying really to work and understand what could be the benefits of Bitcoin or the blockchain technology. So I guess it's going to shift in the good way, but it will take some time, and for any kind of innovation anyway, it's always the case, so it's not such a big surprise.
And a question to Sébastien now. Would it be possible to work on the time also? I mean, I had a discussion with an economist who said with the blockchain technology, it would be possible to program transactions in the future. Is it something that could be possible, and is it something that, for example, you are working on?
Yes, this is possible, and this is one of the aim of the Ethereum project, for example, to provide smart contracts that will be available at a certain date. And I think this is one of a good possibility of blockchain technology, and one of its most advantage. Even if we will have to, again, miners will be the ones who will give the integrity of the date on which the contract will be okay. To answer your second question, we are not yet working on that purpose, and, but we will in the near future.
Okay. Other questions from the audience already? Yes. Nice.
I have a question for the audience, especially for Sébastien. So I really appreciate your points on the fragility of the system and that are applicable for the Bitcoin, but for all the distributed networks. So do you have a parallel about those critics for the internet as a network? Knowing that we have heard about net neutrality, so control over the internet, and so on and so forth. So knowing that, Orange is an internet provider. So how is the cost of running the internet today? How is the internet provider control the access to information, and so on? So have you considered like a parallel between the blockchain protocol and the internet protocol?
And sorry?
And the internet protocol.
There are some parallels between both. Between some people say that blockchain is the same rupture as the internet has been a few years ago. It's hard to answer your question. There are some cases of centralization regarding the internet. We have the similarity of some pools of society leading some part of the internet, and in fact, the internet is a decentralized system, that the use is centralized because the GAFA, for example, is really is in some part controlling the internet because they control a lot of what we do with internet, emails, photos, etc. And yes, there are parallels between both. And I don't know if I understand, if I well answer the question, but. Exactly, I'm not sure.
States and so on, but the overall system works the same way, and that's why you cannot shut down the blockchain, because you need to shut down the internet, as Eric said.
I think that similarly one can shut down the internet if you have enough money to put it, but I'm not sure this will appear because this is too much important for now. Someone behind you has the answer.
Nicolas, you wanted to say something?
I'll just make the comment that like all networks and all services have different risk profiles and different like optimizations or benefits and drawbacks. And I think one of the things we've witnessed with the internet is we was able to promise a lot of things for us. We see a lot of centralization in the internet. There are maybe 3 ISPs in the United States. You don't get a whole lot of choice. You really don't get a lot of freedom with your personal data. That's very different in Europe, but I'd still caution that it's not very good here. And there's going to be a major battlefield over who gets ownership over data in the future. And I think fundamentally, I'm kind of excited about the opportunities that blockchain technology provides for us to recapture what belongs to us. We kind of take it for granted, but like, you would be astonished what Google can do with your search profiles. Everyone thinks they go to Google and search and get the same results as the person next to them. They are highly tailored toward you. And just to give an example, 7 years ago, I worked on ad tech technology, where if someone went to a website and searched for like a red coat and they didn't buy it, and then a week later, we would detect that a storm was coming in the area where you live, and we would serve an ad with the same red coat that you had searched for 7 days earlier. That was 7 years ago. Imagine what they can do now. So this stuff is really sophisticated. I guess my point is that on the networking side, I have major concerns around data privacy and anonymity, and I think Bitcoin and blockchain technology does a better job of addressing those, but it's not perfect. As you mentioned, like, transactions are actually not anonymous. When I send a transaction to Eric, it broadcasts to the network. Eric and I can look at that transaction. I can actually study it forever. I can see where he moves his money and where it goes. There will be a criticism of Bitcoin, which is not made enough, which is it may not be private enough. And we'll see more about that in the future. But basically, when you choose to use services online, you may want to use services where you are in full custody of your data, your funds, what you choose to publish, and those kind of things. And it'll be a debate, right? Sometimes we use Twitter and we broadcast everything we're doing and where we are and what we're eating and who we're with, and we sell that information away, we give it up. But then there are other services where we're going to want a lot of privacy. And so I think privacy services online will be huge in the future. So anyway, I'd be curious for other thoughts.
I think also that the threats are different between internet and blockchain, because in the internet there are some way to cheat, and but here regarding the blockchain, the way to cheat is to break the integrity of the blockchain and to make things that are not really possible in the internet. If you control the blockchain, you can break the integrity of the blockchain and add something wrong in the blockchain, which is a threat which is not really, which does not really exist in the internet case. There are some other threats that are really important also, but I do not think that this one is.
I think there were questions over there. Meanwhile, Sébastien, do you think it's possible to avoid the concentration even in a network like Bitcoin? Because, as you said, there are predominant actors.
I know that Ethereum is working on a new way to validate the blockchain, and they say that the creation of pool will not be possible. For now, I don't know how it can work, and we will study that in the next month, but for now I don't know, because they do not have published the way. For now they are based on the same function as Bitcoin, but they say that in a few months they will go to another way to validate the integrity of the blockchain, and I don't know.
Yes.
Good morning. Katia, I work on mobile money and mobile remittance. So my question is, how does blockchain cope with the international and local regulations? Like you have international regulations on anti-money laundering, combating finance of terrorism, and so you have to report suspicious transactions to the right authority, and you have national regulations on the amount of money flowing in or out of the country. So there are limitations, and there are even some countries that forbid sending money abroad. So how will that work with these regulations? Will there be some instance in Bitcoin or blockchain that will report such transactions, or are you relying on the regulator to pull the information himself?
Well, we are running an exchange, so we do have some KYC, AML. But this regulation applies only on the frontier, when you go from the euro, the dollar to the Bitcoin, and the other way around. And when you are inside the blockchain realm, no regulation at all apply, which means that you can completely escape capital control, and there is no way to stop any kind of transaction inside the Bitcoin universe. That is why there is the regulation only on the exchanges, all the places where you can go from the traditional financial system to the Bitcoin financial system, and these places are now heavily regulated. And if they are not regulated, then there is a lot of danger for the users. We have seen 1 year ago a huge exchange which went down with hundreds of millions of dollars, name is Mt. Gox, because it was not regulated, there wasn't any audit, etc. So people understand that there is a need for regulation, not only because of Amaelle or money laundering, but also to secure the funds. So this is the only thing that they can do is to monitor the frontier, the exchanges. But other than that, if I have 1 million euro in Bitcoins and I'm in China or if I'm in Russia, if I want to escape capital control, then I can do it with Bitcoin. And this is what they have done in Russia when they couldn't go out the rebels. And this is what they have done in Crimea, in Ukraine, to finance to send money to some people, because all the financial system was frozen in time of crisis, of war. So you cannot shut down the blockchain. You cannot shut down Bitcoin. See, this is the point of it. After, is it good? Is it bad? I don't know, but it is what it is.
There were other questions here.
Hi, Sébastien Couture, co-founder of Epicenter Bitcoin. We do a podcast and we interview blockchain startups. So since I have two startup founders here, I'm interested in knowing, so in the past year we've seen sort of a shift in the overall sentiment in the Bitcoin space about sort of where this is going and the future of Bitcoin. I remember just about a year ago I was at a conference in Berlin and the atmosphere was eclectic, and recently I was at that same conference in Berlin and there was at least a fifth of the people there, and the atmosphere was completely different. And it seems that a lot of Bitcoin companies that got funded this year are now burning through cash, waiting for that adoption to come. Some are even shifting and pivoting to other more financial use rather than consumer use. Where do you guys think that this is going, and how will Bitcoin startups respond to this, and what do they do if they start running out of money?
Okay, thank you for your question. So what is the state of Bitcoin from kind of an entrepreneur or startup perspective? I think it's still really healthy, but I do think because the price of Bitcoin has been relatively stable, or in fact dropping over the past 12 months, that has tempered some of the enthusiasm from speculators and people that tend to pull attention constantly just to the value of the currency. So to bring some clarity to our growth, we add about 30 or 40,000 users a week onto our services, which makes us one of the fastest growing technology companies in the world, not just in fintech. And the interesting thing is, the opportunity of Bitcoin may not in fact be in North America or in Europe. And it's really hard to understand that, but we live in a place where we have decent access to financial services. Most people here can get bank accounts, and so that's probably good enough for them. But there are many places all over the world to address mobile money and remittances where that's not the case, where institutions have devalued the currencies, capital controls are in place, and people can't move their money around. They have no trust that when they make a deposit in their bank, they'll be able to pull their funds out. And these are the places where Bitcoin has a much bigger opportunity from my point of view. In fact, Dr. Garrett Heilman, who's a professor at the London School of Economics, has done a huge statistical survey on what countries will most likely adopt Bitcoin, and it's the places where there's the most friction in the financial services. So places like Argentina, in Venezuela, Ukraine, Iran, Russia. And so these are obvious ones where there's a lot of usage coming, and it basically just boils down to utility. If Bitcoin can solve problems more efficiently than other financial services, then it will. I had the ambition that I thought things would happen very, very quickly, and I think my timetable is starting to get a little bit extended in terms of how fast things will happen. But just remember that 6 years ago, most people had to drive down to a Blockbuster to get a DVD, right? And now we can download a movie onto any smartphone or device instantly, basically for free. Consumer perceptions are changing very fast. Millennials have a totally different point of view about how they'll manage their finances. And for all the people that have never had a bank account, like the conditions are very ripe for fast change. And I would submit that the sand is moving very fast underneath people's feet. So I still am very bullish. Bitcoin is unusual in that many of the entrepreneurs and many of the people in the space are rushing to regulation because they're seeking to surround themselves with legitimacy. And the interesting thing about that is that Bitcoin as a protocol, once you have your coins in Bitcoin, it's vastly more efficient. All of the pain points for people acquiring Bitcoin or getting them happen at that intersection between legacy finance and new digital services. And that's not Bitcoin's fault. We have all this regulation on financial services because when you give money to a bank, you better hope that they hold it for you. You better hope that they don't have criminals running that thing, and you better hope that they audit their funds, that they don't lend it to bad people. And we've seen what's happened over the past 5 or 6 years with our large banks. So I think there's appetite for something better. I submit we can do better things, and I think that Bitcoin will start to come over that curve at some point this year. But for small startups, it's going to be difficult. Because this is a heavily regulated industry, when you hold custody of people's funds, you need to be very cautious about the design of your services. So if you do Bitcoin things and you hold people's money, you will be regulated like a bank. If you build a service that puts a user firmly in control of their funds, it's a very different profile, and it should be. So it just comes down to the fact that there are going to be a lot of entrepreneurs that come into this space. There isn't a lot of expertise because the whole thing was introduced 5-6 years ago, and the really best people are all building their own projects. So capital and talent tend to go toward projects that have a large amount of momentum, and that's going to continue, I think, in this space.
Are there statistics about the use of Bitcoin in different regions of the world, for instance?
So there's not a whole lot of data on that. There was a big report that came out last week by CoinDesk, which is one of the blogs that covers the industry, and they looked at use cases. There aren't perfect optics because you don't necessarily know what the funds are being used for. Early on, there was a lot of illicit activity that was used with Bitcoin, but then despite everyone thinking that it was anonymous, the United States government came in and wiped out some of the services that were creating these marketplaces. And there are new ones that have formed. Everyone's maybe familiar with the story of the Silk Road, which is a wildly fantastic fiction, and the truth is stranger than the fiction in that whole story. But now, when you've got companies like Dell and Overstock and these other big organizations accepting Bitcoin as a form of online payment, this is a big deal for them because they all compete on margin, right? Tiny, tiny margins on inventory costs and payment costs. And so when they can innovate in a payment mechanism, it's a very big deal for them. So, it's online commerce, it's a lot of cross-border payments. International remittances is brutal. If you work here in France and send money back to Africa, you have to use Western Union or PayPal or something else, and it's very expensive. They take sometimes 15, 20, 30% of the cost of that transaction, and most remittance payments are less than $200, and these are frankly some of the poorest people getting fleeced to send money to some of the poorest places in the world. So it's a pretty parasitic environment. And the remittance market is enormous. It's $500 billion a year. So if I could go into a shop down the street and give my hard-earned cash, have that sent over the Bitcoin blockchain, and have my family member take money out on the other side without using Western Union, and basically have a fee-less international money transfer, that's pretty exciting. And that's a $500 billion market. So what if Bitcoin takes 10% of that? What if Bitcoin takes 5% of online e-commerce? What if 1% of wealthy people decide that this is a crazy enough idea that they can put 1% of their net worth into that? If any of those little conditions come true, Bitcoin doesn't have to win and become the worldwide international form of commerce. It just takes a little bit from everywhere, right? It's a piranha. And if it does that, it's going to still be incredibly successful. So that'll be the value of the network, is the value that it returns back to its users. That's why it's so cool. Everyone that participates gets to basically increase the value.
Other questions?
Hi. Not an expert on Bitcoins, but organized the biggest nonprofit tech conference in the world. So I've seen a lot of discussions on the topic. One issue, so you're adding users, right? And as I understand it, if you have your Bitcoin account, you have a private key for it. So what happens if you lose that key? Where do you go to retrieve it? And you know, the questions that surround that privacy issue could be answered by anyone who.
Well, it is true that in Bitcoin, you are your own bank. It means that to own Bitcoins is to own these private keys. It's information. And if you lose this private key, it's game over because you cannot recreate it. The entropy to create it is too huge. There is no way you are going to guess it again. So the same idea is that if you own gold, you need to secure it in a safe or at home or whatever. If you own Bitcoins, you need to secure them. And there is a need for security devices. And it's a real problem and a real question. So first of all, you can make backups. I mean, you can duplicate this information because it's just information, so you can have backups somewhere. And also you have to be very careful with it because if you put it on a computer, and if this computer has virus, keyloggers or whatever, you can just take it. And this happens a lot of time. And this is why security system for Bitcoin for the end user is paramount to have Bitcoin succeed. And our company, Ledger, is doing, in fact, this kind of security devices. You cannot see it from here, but this is a smart card. This is exactly the same technology which is used by the banking industry into credit cards. It's secure, the private keys inside impenetrable secure element. It will sign all the transactions inside, and so even if your computer is compromised, your Bitcoins are not at risk. And of course, if you lose the key, you can have a paper version of the information in a safe. And also, we can use multi-signature. The Bitcoin protocol allows to put in place a much more secure way. If you had, let's say, 100 millions of euros inside a private keys, and it wouldn't be, you wouldn't feel very safe just to have it here, because if someone steals it, it's game over. That's why you can have multi-signature, the same way that to, I don't know, to launch atomic bomb, you need many people to put a key and sign. It will be the same. You can have some kind of control of the funds, like 3% out of 5 need to sign, so, or 7 out of 10. So you can have a lot of solutions to secure the funds, avoid theft. And some of the signature can be an oracle, which means, okay, I'm going to sign automatically, but after 1 week. It's like you cannot open the safe waiting for 1 week, the same that you have in the banks. So in a way, you can really recreate security systems which are extremely efficient. You just need to do it and work on it, and us and other companies are doing it.
All right, so a follow-up question for that. Why, as a private user that doesn't understand the Bitcoin business, why would I trust your company and your startups more than I would trust a bank that follows strict regulations, that is controlled by a central bank, and so on? Even though your technology might be, top of the line and provide security, why would I trust you as a company?
Why? Because it's trustless. It means that you can demonstrate from a mathematical point of view that you can have a scheme of storing and securing your Bitcoins, which even in the case that our company or his company or other company is malicious, that it is not possible to get control of the coins, of the Bitcoins, of the private keys. It exists trustless solutions because, yes, you're right. Why should you trust anyone? So you just have to trust yourself, and even you can have solution with, even if you do not trust yourself for some reasons, you can still secure in a way your coins. You just need to use multi-signature using different kind of technology which cannot collude against you. So it exists solutions to do that, and which can be quite easily accessible. You do not need to be like a geek or an expert to do that. You have just out-of-the-box stuff that you can buy, that you put in your computer, and you just use these protocols, and it's extremely safe.
That's why having your private key is so critical, because if you surrender your private key to a company that then manages that, that's no different than giving them your money. Now, maybe you're okay with that, but then you really need to trust them, and that's why companies that secure other people's private keys, they're just Bitcoin banks, right? And the whole point of Bitcoin was to put people firmly in control so you didn't have trusted third parties. When you have trusted third parties, you have to have legislation and regulation and insurance, and that creates cost structures that then get built into all the transactions. So if you do that, you are surrendering your custody, essentially, of your money. So, by the way, you can choose either one. There are Bitcoin services that do this that are basically banks, and you deposit your funds in there, and then you should really be careful with those types of services. When you are the sole custodian of your funds, you need to be very careful personally, because if you have those funds and you forget your private key or lose it, then you're in trouble. But it's just a risk profile, so it's up to you.
And I think that to be complete, this is a really ancient problem in cryptography, how to secure the private key and how to be sure that this key will not be given to other people. And regarding if I encrypt my data before putting them on the cloud or anywhere, if I lose my key, I lose my data. And this is really an ancient problem, and we are very mature on the solution that can solve this problem. I think that Eric has given some of them, but there are also a lot of other solutions to not have this problem in practice.
There also have been security problems with some Bitcoin services and problems of hacks and stuff like that. So
come back to the same problem. It's just if you have some troubles with Bitcoin services, it's because they get hacked and they get their private keys stolen. So that's why there are also solutions for enterprises, hardware security modules. In the same way that banks are securing their assets in a way with the Bitcoin services, they need to have security solutions. Otherwise, they get hacked and they lose their customers. It's a one-on-one here.
Just to finish off, to follow up on the questions, to go on to what the topic is. So when you say that there are like coin networks that works at banks, and so. Is there a business there? Is it a big thing, the cybersecurity of Bitcoin, and provide that security to the user? Is that something that will grow, or is it something that will be left behind when people become more aware of Bitcoin?
I think it's essential. I can ask Nicolas. He has 3.5 million users who are using his services to get the Bitcoins. I think security is one of the most of the biggest topic, and it's the same for any other Bitcoin users or Bitcoin services. So no, I think it's essential because it's based on, of course, on it's money, it's value. So if you lose them, the consequences can be critical. So security is one of the biggest challenge for Bitcoin to go mainstream. That is why it is needed to have easy to understand, simple and efficient security solutions.
I think we're going to have just one more question. Over there? Yes?
Hi, my name is Clément Epier. I'm co-founder of Cell Labs, and we are working at the moment with different groups, among them Ethereum, so I was happy to see you mentioning them, on applying the blockchain beyond Bitcoin. And I've just came, so I don't know if it's been going through the process, but beyond the economical aspect, are you working on something a little bit more interesting? Because the financial aspect, of course, has been the main topic for the research, but some of the things that we've been working, and we've been visiting a lot of groups all over the world now who are doing this, is to apply to something different, like energy transaction, or drone technology for telecommunication, or let's say AI, or artificial life, or whatever you can think of. Do you have in your own work or with your own explorations in these kind of things, and maybe to share it with people so we can go beyond just the financial aspect? Thank you.
That was the question. What's next after Bitcoin?
So I'm very excited about all those things, but I'm still focused on getting mass scale on Bitcoin. And I think it's super important to have context for that. Most people in this room aren't using Bitcoin yet, and I'm not sure if they're ready to go to a trustless transaction system for stocks or for managing their utilities or whatever. And so before I think we can get to that world, I'm still very focused on getting mass adoption of Bitcoin first, and it's just a stepping stone to me. I'm compelled by those ideas of what's next for blockchain technology, but I don't see us getting there until we build mass scale. But I think being able to transact with anyone, anywhere in the world, instantly, basically for free, is a killer app. That's amazing. There are going to be other ones that are great too, but that's a huge deal. Think about how much wealth is concentrated in the hands of so few, how much money is printed every single year, and yet we don't get increases in our salaries. We don't have a stake that much in the network of finances that exists today. That can be reinvented. That's why this is so exciting. We get to reimagine how the world transacts. So before we get to all those other things, at least at Blockchain and my company, we'll be focused on bringing Bitcoin to hundreds of millions of users. And then after that, there'll be lots of other entrepreneurs that I'm sure will build super interesting things on other blockchain services. But for me, it's like we got to capture that space first, just like practically, and then there'll be other things happening.
Well, we are very horizontal. We want to be like the Cisco for internet, so security is applicable for all kind of usage of the blockchain. Can be like for Bitcoin, for currencies, for anything. But in fact, I have a question for the audience. I think maybe we should have asked at the beginning, who here has Bitcoins? Yeah, that's pretty good. And who here now thinks that they want, when they are going home, are going to look for Bitcoin and blockchain and try to understand better what it's about? Okay, right.
Everything has been said, but to answer the question, I think we were not there if the question is not really important, and I think that all of us are think that there will be something after Bitcoin, and we will see.
There already have been other cryptocurrencies, but not with the same success so far.
Yes, but the main difference between Bitcoin and other cryptocurrencies is the decentralized part, which has not been the case for other systems. Other systems were more centralized, and banks should say okay to provide such kind of crypto coin. And there are crypto in current payment systems, in all of them. So any payment system is a crypto system. The Chaume's system, the main drawback of Chaume's system is the anonymity part, which is really not desired by banks, because they lose the control of what can be done with the money.
Maybe one last question?
Hello.
Yes.
I don't know if it's a smart question, but what's about lending bitcoins or borrowing bitcoins?
Well, there are some companies, named for some Bitlender or other, which just provide loans in bitcoins, and it's based after. The question is, what is the guarantee? Because everyone is like pseudo-anonymous, so you don't have. If someone doesn't pay you back, what do you do? So it's not an easy problem. People are trying just to work on reputation, like associating, I don't know, their Facebook account, Twitter, saying, okay, this is someone with some reputation, which has something to lose, and they are just experimenting with big data. But it's too easy to game the system, to build reputation, to build your lending, and after the last time you disappear. Everything is just in infancy, but one thing is for sure is that we will see on the Bitcoin realm all which exists in the traditional financial system will exist in the Bitcoin realm, and it already exists, especially for trading, like for future hedgings. You had a lot of things, and I'm pretty sure that we will see lending when we will have the technology or the answer to find the counterparty and the guarantees.
I think there is one last question, and after that we can have a break, and of course you can talk with the speakers at outside this amphitheater.
Yes, good morning. Thank you for the last question. Actually, you talked for the beginning of cryptocurrency. But when you sell your project to venture capitals and business angels and so on, do you really talk of cryptocurrency or crypto commodity? Because I mean, the Bitcoin, it's more like gold. This is more of commodity, and this is not a real currency like the euro can be or the dollar can be, because these monies, how to say, they're really created by banks. This is real creation by private banks, and this is very dynamic. Banks, they are used to taking the risks. They are kind of social network between lots of users, and so they can take the risk and make a lend to people and then destroy that money. So this is what makes investment, and this is the way the current economy works and has been working for tens of years. And so how can you sell a project which is based on like an old-fashioned gold economy-based economy? So I have strong conviction in what is the blockchain and its use, and the fact that you can have trust in it to like for asset management. But are you really selling to people a new currency, or are you rather selling a new system of protection?
I will answer very quickly and let Nicolas answer. I guess that why VCs are investing into Bitcoin and blockchain, because it's going to earn a ton of money. That's why they are investing.
So Bitcoin is a very unusual currency because it has properties that make it look a lot more like a commodity. And we don't use gold anymore in our currencies. All of our currencies, actually relatively recently, were backed by gold. You could go exchange paper and get physical gold. Gold is interesting. We like gold as a store of value because it's hard to counterfeit, even though now you can put tungsten in it and dilute it. It can be divided and recombined. It's fungible. It's relatively transportable and difficult to destroy. So gold has certain properties that have, for thousands of years, been recognized by humans as something as having utility for transacting. It sucks to go buy a Starbucks with, right? I can't sit there and like chisel it off. So we invented paper that was then backed by gold. But then they just broke that standard. And in the last 30, 40 years, we've seen incredible destruction of savings and wealth. So yeah, everyone has more dollars, but people aren't earning higher incomes. And this wealth capital concentration has all kinds of incredible consequences. So to say that, yes, it's created an investment society, I would say that's accurate. But I would also say that there are unintended consequences to the design of our current economics. And to be clear, I don't know if Bitcoin is like a perfect panacea for these things. It's just a competitor, and it's one solution. In fact, I think even though like our grandparents may not understand cryptography or digital money or how to use a smartphone, they know why saving is important. And they know why managing their cash flow and their balance is a good idea instead of racking up huge amounts of debt. And so at the end of the day, Bitcoin as a currency is kind of unusual. Just like light sometimes acts like a particle and other times like a wave, Bitcoin sometimes acts like a store of value, like digital gold, but also like a very fluid type of money. And what's cool is that you can actually study the currency instantly all the time. You can go to the blockchain, look at all the transactions that happened the past day, see how valuable they were, how frequently the funds are moving around, and you can ask yourself the question, is the monetary velocity faster or slower or the same with other currencies? This has an interest for economists. By the way, I'm not an economist. But if you look at this, so far the research shows that Bitcoin is moving through people's hands at the same speed as other currencies. And this should be predictable because it's purely digital, it can go anywhere in the world, and it's permissionless. So even though it may have properties that kind of make it sort of unusual for that as a store of value, it has other properties that make it super fast for currency and moving money. So we'll see. But yeah, the reason why venture capitalists put money into projects is because they want profit. And they see a huge opportunity here for all the reasons that were described. So whether it's currency, remittances, smart contracts, land registry, if you're an artist and you write songs, you could embed the work you do into a blockchain so you could prove to that record label that steals your music 10 years from now that you started working on it first. And so it's an immutable ledger. It's a database that lets us forever prove that something happened. And money is just the first application of it.
Okay, thank you very much to you three. And thank you for attending the session.